Hello, everyone. Welcome to the TradeStation Masterclass. This is our technical analysis series. We highlight, certain studies on the TradeStation platform, talk about its technicalities, how they're calculated, things to watch, when you're using some of these studies. And today's turn is the floor trader pivots. It's not, a calculation that's proprietary to TradeStation in any way, but we have it built into the TradeStation platform. You can use it right out of the box, and we are going to dive deep into its insides. Okay. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities, and it's always a pleasure to do these classes. Let's go through some of the disclosures. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, and past historical performance is no guarantee of future results. For additional information on these disclosures, the link is right there on the PowerPoint, www.tradestation.com/important-information. For now, I am going to share with you a link to this PowerPoint, which is converted to a PDF. So you're actually getting a PDF of the information we're going to talk about on this PowerPoint. So the floor trader pivot, where does the name come from? This is an indicator that was used for many years at the actual trading floor. And traders, they were throwing out bids and asks, and they were using the floor trader pivots as a way to know if what they were getting was a good deal or not, if it was expensive or it was cheap. Based on the prior day's trading prices, they, of course, used those prices to calculate a pivot point. So anything that was above, the pivot point would be an expensive price, and anything below that pivot point would be a cheap price. So whenever you were below that pivot point, it was a good time to buy. And whenever you were above that pivot point, it's a good time to sell. And it all came about because floor traders wanted a quick way to have a reference point to what was happening previously and know, where does the price, where was the price right now in comparison to what it was doing before, and have some sort of a reference point and determine whether they were getting a good deal or not. We have that same calculation built in right now inside of TradeStation. When we look at the pivot points of the floor trader pivots, we're going to use those lines in the same exact way as we do support and resistance, because that's the main concept around floor trader pivots, that the prices usually interact with these levels. So they're going to act as support and resistance. In fact, when we look at the floor trader pivots inside of TradeStation, the lines are called exactly that, support one or resistance one, because they are intended to be used in that same concept. We know that what drives the prices up and down are, of course, offer and demand. So you have buyers and sellers. There's always going to be an imbalance between buyers and sellers. When you have more buyers than sellers, of course, that's going to drive the price up because there's more demand, right? And those are simple concepts of price fluctuations. When the other side is true, when you have more sellers than buyers, that usually drives the prices down because of that imbalance. So whenever the market reaches that balance between buyers and sellers, it is said that the market is moving sideways. And of course, floor trader pivots are going to use that same support resistance theory so that you can make trading decisions. We don't have a strategy per se developed or designed around the floor trader pivots. Maybe that would be an interesting exercise to develop either in class or maybe bring it in as an example, right? But for now, we just have it as an indicator. In fact, we have two versions of that indicator. They're both different, and we'll talk about the differences and the similarities. The floor trader pivots are reset each trading day. That's the way that it was used before. The floor traders, every single day, they were looking at yesterday's close, high, and low prices, calculating the pivot and using it for that day, that current trading day. When the day was over, or let's say the next trading day, they would just reset that number again and look at the floor trader pivots. And you're going to see that same behavior when we use the floor trader pivots right here in TradeStation. Pivot levels are calculated using the previous day's high, low, and close, and plotting these levels on the current trading session. So we'll talk about the technicalities of those studies, what you can do and what you shouldn't do, because it just breaks the study. It doesn't break it like in a way that you cannot go back, but it just breaks it in a way that it doesn't provide you any valuable analysis. But let's talk about some of the calculations. The first one is the actual pivot point, sometimes referred to as PP. In the indicator itself, I'm sorry, it's just funny. Every time I just say it, it's just funny. Pivot point is going to be referred to as PP, and you're going to see sometimes this double P right on the chart. And the way that it's calculated is using this formula. It just takes yesterday's high, yesterday's low, yesterday's close, add them together, and then divide them by 3. That's the main pivot point. And that is the pivot point that usually, floor traders back in the day were mostly interested in. And the one that, they decide whether they were getting a good deal or not is based on this basic calculation. Then you have 2 additional lines calculated from that starting point. From that pivot point, we calculate a resistance level and we calculate a support level. But we calculate them not based on what's happening to the market right now, but based on the prior days, yesterday and the prior day low and high. How is it calculated? Well, you take the pivot point, the PP, you multiply it by 2, and then for the resistance level, you subtract yesterday's low, and for the support level, you subtract yesterday's high. That's the way that the value is calculated. If you plug in the values for every day, you'll get these specific levels that you can plot as lines. We have an R2 and a P2, an R2 and an S2, which is resistance 2 and support 2, that are calculated based on also this pivot point, where you take the pivot point, you don't multiply by 2, but you add yesterday's high and then you subtract yesterday's low. On the support level, you subtract yesterday's high and you add yesterday's low. And then there's an additional one that you can choose to whether display it or not. It's an additional support, an additional resistance level. So it just takes R2 or S2 and does the exact calculation that it did before, where it adds yesterday's high and subtracts. Well, you get the idea. These are just straight formulas. I would recommend that you keep them handy. If you're ever questioning a particular level and saying, well, it's odd that this level is right at this price, well, you can come back here and know exactly how it's calculated. You just plug in the numbers of the prices that are happening currently, and you can double check those numbers. Let's do that right now. I'm going to open up TradeStation. Okay, and I'm going to bring up a chart. Let's go ahead and take a look. Chart analysis. All right, let's move this up and resize it. All right, this is a 5-minute chart of Delta Airlines. And I'm just going to go to studies, add study. And you'll find it listed here in the floor trader pivots. Here it is. Notice that there are 2. We're going to compare them in just a moment. The only difference between the 2 is that one is followed by the letters EX. I wasn't sure what EX stood for. I'm not sure if it's extended or expanded. It just provides you more flexibility. The original one is just the floor trader pivots. And I'm going to show you what's added new on EX. But the floor trader pivots, I'm going to put them on. And I'm just going to use default settings for now. We'll talk about some of the inputs here and what you can do to modify them. I'm going to click OK. And here it goes. So let's take a look. Let's take a look at the levels and at least do one calculation. Let's see. The orange line, the line in the middle, that's the pivot point. And if you go back to the PowerPoint that I provided you, I color code the lines with the same colors that you find in TradeStation that you know which calculation is which. We know that for the pivot point, we're going to take yesterday's high, low, and the close, and then divide it by 3. Let's go back here to TradeStation and find out. Let me open up the calculator. Let's see. I'm just going to make it smaller here. All right. So in my calculator, there we go. I'm going to be taking a look at the high and the low, where the highest high of yesterday was $30.40. Everybody sees that right there in the data tips window? High, $30.40. So in the calculator, 30.40. I'm going to add the low. What is the low of yesterday? Well, the lowest low is right here. 29.10 is the lowest low. Everybody sees that in the data tips window, 29.10. We take a look at the calculator. We're going to add 29.10. And we're going to add one last price, which is the closing price. What is the closing price of yesterday? The close here is 29.77. In the calculator, I'm just going to add, what was it? The close is 29.77. All right. So 29.77 gives us a total of 89.27. We divide that by 3, and it gives us 29.756666, which is rounded up to 29.76, which is exactly our pivot point here on the right-hand side. And as I just did right here, you can plug in the numbers for every single line and find out the accuracy of the calculation. Some days, you're going to see how the price activity fluctuates significantly. Some others don't. Like, for example, today and yesterday have been days that have pretty much, maintained themselves between that pivot point and resistance 1. You see, kind of the same behavior. We had a little break here on the pivot point, similar to what happened at the beginning of the day yesterday. But depending on the day's volatility, I mean, some of these candles will penetrate upper or lower bands. If you don't find lines as you scroll back, like over here, this is July 11th, it's because, the trader or the floor trader pivots is going to use at least a couple days at the beginning to calculate. So that's why I don't have any lines here. If I wanted to see lines for the 11th, which was Monday, I just need to add more historical data. Let me do 15 days here. I believe the default is only 5 if you look up at a 5-minute chart. But now if I scroll back here to 7-11, Monday, you can see that we were just briefly at the pivot point. We kind of dropped to the support level, and you can see that the price activity kind of just, was very close to that support level, and it didn't fluctuate very much. So depending on, I suppose that you can use the floor trader pivots also as a way of measuring how volatile the prices are on the current session compared to the prior ones. Because remember that all these lines that you see, let me scroll to the very front. All the lines that we see here on the current trading day are calculated based off the high, low, and close of the prior day. If I go into the formatting of the study, there are 2 inputs that you can modify. Here's a use session or date change, 0 or 1. This input right here is important to remember if you want to switch this to something that trades overnight, like a futures, because you have to make a choice whether to use the session time or the date change. So it doesn't really apply to stocks because stocks only trade during the day. So there's not going to be a date change in the middle of the trading session. That only happens for futures. If they trade 24 hours, some of the trading activity in the session is of the prior date, and then overnight at midnight, the date switches, even though you're still in the same session, same trading session that opens, for example, on the S&P E-mini, the session opens at 5 p.m. and it goes overnight until 4 p.m. the next day. But we're talking about that transition from one day to the next. And here you control whether you want the floor trader pivots to use the actual sessions or you wanted to use the calendar. So let's go and first of all, let's change this to ES. I'm going to go here to @ES. The default is the session. So you can see that for the ES, it starts at the beginning of the session. I have the session clearly identified by the dotted line, the vertical dotted line here. So if I put my cursor right on top of that, you can see how the time is, I kind of messed up the time. It is 18:05. It is 18:05 Eastern time. Now 18:05 is 6:05. So I guess the time was fine if I think about where this contract trade. This is the Chicago Mercantile Exchange. So my chart says 18:05, but in reality, the time is 17:05 Chicago time. Okay, 17:05, and it's 17:05 because I'm on a 5-minute chart and the session starts at 5 Central. But what I'm trying to get to is that the lines reset at the beginning of the session. They don't reset at the beginning of the day. Now, the beginning of the day is somewhere here. So here's the 00 time. So midnight, exactly midnight. The date on the prior bar, if you look at the data tips, the time 23:55, look at the date, July 14th. The next bar, which is 00, is July 15th, one day later. So if I wanted to use the date change rather than the beginning of the session, we have to come here to the settings, and it says use session or date change 0 or 1. Well, this one's set to 0. I'm going to change it to 1. And here you can see how the actual pivots or the pivot points or the floor trader pivots are reset at midnight. And you can see those going forward. Okay, so that's one thing to keep in mind. If you're trading something that trades overnight, it doesn't really apply to stocks. The other input is either plot 5 or 7. 5 or 7 refers to the number of lines that you want to see. By default, the floor trader pivots is going to plot 5 lines, which starts with the pivot point, the orange line. It gives you 2 support levels and 2 resistance levels, a total of 5. But if I come over here and I say I want 7 instead, then it adds additional lines, which are kind of a color magenta. And these work really nicely when you have market activity that's really volatile and you need those extra levels to be calculated. Now, for the most part, most days here stay within, like over here on this particular day, you can see that it went from the pivot point to the first support, second support, and it inched very close to the third support. A lot of times you're going to need those extra additional lines to see how it reacts to more volatile times, so keep that in mind. All right, so that's pretty much, very simple, very straightforward. Now, if I use the other study, that is EX or extended, let me show you what that does. Study, add study. This is floor trader pivots extended. You can see how the list of inputs is significantly larger than the one we just used. We only had 2 inputs on the floor trader pivots. This one, has about more than a couple dozen different inputs. Most of the inputs, though, refer to styling. Like, for example, these ones that say red or my colors, those are the colors of the lines that whoever programmed this study put those as input so you can come in here and change the color by just typing either a name of the color that you like. You can also use an RGB function if you'd like to do it, or just type in one of the colors that Easy Language recognizes. And then you have all these other ones that say show, 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 show. That's, if you want to show whatever line is represented in the input name. Show PP is the pivot point. And then you have R1 through R5, which are your resistance levels. And then S1 through S5, which are your support levels. Text label font size, because this one right here shows you some labels, which I find very, very useful. Let me go and show you how this looks like. All right, and take a look. It's even using, a color palette that is not so so bright on your eye. Sometimes, we get these blues and reds that are just too bright. This is kind of, using kind of earth tones, and it's really nice. But you can see that it follows. I believe by default it uses just the original calculations. There's 3 different calculations now for floor trader pivots. Now, if you go out there to different technical analysis forums, you're gonna hear the word Camarilla, and that's just a type of calculation that was designed over the floor trader pivots. If I go and look at the inputs, you're going to see that the top input says pivot calculation type. Now, wow, the feature is working now. Remember that for the longest, I've been complaining about additional text inside of Easy Language that made no sense. For example, if I go back here, I don't have it. Let me go edit Easy Language here. So if I scroll to my inputs, yeah, here are my inputs. This additional text that appears here in red inside, these square brackets, like for example, this is the one we talked about, pivot calc type was set to 1. That's an input. But over here, you have a tooltip that says pivot calculation type, enter 1 for classic, enter 2 for traditional, and enter 3 for Camarilla. When I go back here to TradeStation and I go into the inputs, if I hover over calculation type, now I get the tooltips. This is something new that was implemented in TradeStation. If you don't have it, it's probably because you haven't been prompted for the new update. But I just noticed that now that I hover over an input name, I do get the tooltips kind of letting me know what needs to be entered here. Back in the days, I had to open up the Easy Language code to find out. Now I can see that I can enter a 2 for traditional, 1 for classic. What I don't like is that it goes away after some time. So I hover over it, and 3 for Camarilla. Of course, the Camarilla are a little bit more advanced type of calculation. The formulas are not as simple as the one you saw inside of my PowerPoint. In fact, just so that you have an idea of how different these floor trader pivots are, take a look at the size of the code. This is the EX, floor trader pivots EX. Let me open up just a simple floor trader pivots so that we can compare. So let's go here to floor. Here it is. I'm going to open it. If I scroll down all the way to the very end, you can see that the code has about 137 lines of programming code. Floor trader pivots EX. If I do the same, if I scroll down, you're going to see how the code goes down to 1,948. So yes, they are representing the same analysis idea or the analysis technique, but this one, of course, is going to give you more flexibility, starting from that first input that we just saw, the calculation type. Do we want the traditional? Do we want the original? Or do we want the Camarilla? Now, the difference between the 3, don't know what they are. So I know the calculations for just the, what do we call it? The classic between classic and traditional, I would have to look here inside the code to have an idea of what those are. So let's see. BT, bar type, init chart, decimal places. This is error checking. If it's false, percent transparency. This is bringing in pivot PSP. So it's using for sure, easy language objects to make the calculations. I don't have the details as to what are the differences between one and the other. However, I did notice something when I used them both here instead of TradeStation. This is the EX, right? Let me pull up or add it to the chart here, the floor trader pivots without the EX. You're going to see how the lines almost align perfectly. We have a little bit of a shift, but that's almost unnoticeable. If I come over here and I say, I'm going to edit the calculation of the EX one, and I'm going to make it, the traditional instead of the classic, then I start seeing some differences. Let's see. The pivot point, it's blue right here. The pivot point is kind of the same, 37.74, 37.75 is almost the same. So these are the two pivot points kind of almost on top of each other. Now that I think about it, they're pretty much on top of each other too. So the calculation doesn't change that much either. Let's try the other one. Let's try this one with the calculation set to Camarilla. All right, so here's where we see some differences. The ones that have a label right here to the left-hand side, those are the EX version because those are designed to provide you a label next to the line. So the lines that don't have a label, those are the lines that belong to the built-in, the original one, which doesn't have the letters EX. But you can see that the only one that is completely different than the other two is the Camarilla. The traditional and the classic, let me go back in here and change it to number 2, which is the traditional. You can see that all of the lines have a label. So the one that is original, the one that does not have the word or the letters EX, they just fall right below those other lines, okay? But from the get-go, let's go ahead and remove that other one so it doesn't look. So studies, edit studies. Let's remove this one that doesn't have the letters EX. And you can see that you have your pivot point, which is the blue line right there in the middle. And the nice thing about this one is that it labels the lines, R1, R2, R3, R4, and R5. On the other one, you had to pretty much look at the lines and based on the color, determine which ones that were the support or the resistance levels. But this are clearly labeled not only as a line, but also with the value next to it. Of course, the value is also displayed here on the right-hand side, but it's nice to have. Let me go here to, I think I was looking at Twitter. I was looking at Delta. All right. Another thing that this one does is that, let me go back in there, is that you can plot the interval. Plot the interval. Where do we change the interval though? Plot the interval. Let's go. Let's see if it changes automatically. So the interval is right here in that label, right next to that line. So the D in parentheses is just letting you know that these are the daily pivots, the daily floor trader pivots, meaning that they're calculated on a daily basis. And what you're seeing right now are the pivot or the floor trader pivots calculated based on yesterday's day. If I change this to a daily chart, you can see how funky this looks. So this is what I'm saying, that it breaks the study, because you have these lines, being reset every single day. You can see that the interval is still set to day, because in parentheses it says day. So every single day, or every single candle, we have a new floor trader pivots. So defeats the purpose of having levels, because you want to see how the price activity moves around those floor trader pivots. But let's go back in here, because pivot calculation type, pivot interval. Here we go, pivot interval. So we have the pivot label. If I hover over pivot interval, notice that it says enter 1 for daily, enter 2 for weekly, or enter 3 for monthly, enter 4 for quarterly pivots, and enter 5 for yearly pivots. So if I change the interval here to 2, now I'm able to see weekly floor trader pivots on a daily chart. Now that's pretty cool. That's something that the other indicator doesn't allow you to do. And that explains, why this indicator has a lot more code than the original one. But with the other one, I wasn't able to show those weekly pivots on the current week. That's the current week. And those floor trader pivots are calculated based on the high, the low, and the close of the prior week. If I go back in there and I change them to 3, let's go back there. So pivot interval is 3. The nice thing is that you can always see the interval right there inside parentheses. So when you see an M, that just means that you're seeing the floor trader pivots for the month. So here is the beginning of January, not the beginning of January. We're in the month of July. So here we see the beginning of July. And then when you change to June, what you're seeing here are the floor trader pivots calculated with May's data. But you can see 30, or at least, all the calendar or all the trading days inside the month of June. So we're still on, in the middle of July. So that's why July is a little bit shorter. Pretty cool, huh? So if I go here and I set this to 4, these are quarterly. We just started a new quarter. Here's April, May, and June. Okay, and then we can set this to 5. If I wanted to set yearly, so this resets at the beginning of the year. This is from the year before. So we see the floor trader pivots calculated with data of 2021. That's pretty cool. I find it to be very cool. All right, let's go back here to plot interval to 1, which is daily. And we're going to set our time frame here to 5 minutes. Of course, all these lines, I believe, have alert criteria. Let me just check here inside of the code. I'm going to do Control F and look for the word alert. Cannot find the string alert. So this one doesn't have alert criteria. That's impressive that they didn't put it in. What about the other one, the original one? This doesn't have an alert either. So even if you were to come here to TradeStation and you were to modify the symbol and go to alerts and enable it, you wouldn't get anything, because if we don't find the word alert inside the code, it wouldn't generate an alert. That's interesting. I would have, wanted to have an alert configured in so that if the price activity touches that line, then I get alerted, but not here. I suppose that not even if you double click here or right click and edit, doesn't edit as a line. So I just find it interesting that it doesn't have an alert, but I suppose that all these levels are nice to keep an eye on. I'm not sure if there's any strategies developed around this concept, but that's pretty cool to take a look at. Inside the PowerPoint, you have some ideas or some signals on how to use the floor trader pivots. You are bullish or bearish depending on where the price is compared to the pivot point. So if you're above the pivot point, that's bullish. If you're below, then that's bearish. Of course, you also have to look at the direction of the prices when they're above or below, because we said at the very beginning that floor trader pivots were using this to see if they were getting a favorable price. So if it was below, it was cheap, so it was time to buy. But here we're saying that if it's below, it's bearish. So also look at the direction of those prices, because if it's getting further and further away from the pivot point, yes, then that would be considered bearish. But if you're just below the pivot point, but you see the price is going up, maybe it's a great time to go long because you would be getting something cheap. So it works both ways. So just keep an eye on where the price is heading. When a floor trader pivot is broken, price may test the next level. And when support is broken, it may become resistance. And when resistance is broken, it may become support. This is the same theory, same concepts that we talk about when we talk about support and resistance. And we said at the very beginning of the presentation that we would apply the same theory. We will have to combine the floor trader pivots analysis with overbought and oversold oscillators, which may confirm signals. And that's, everything that I had for you guys. There's not much to say about floor trader pivots other than, it's an indicator that it's popular in a sense that a lot of people use it. Take a look at the different levels, and if they work for you, I would be, it'd be great to have a strategy to see if there's something on floor trader pivots that can be used in an automated way. But looking at where the price has been historically and using those to calculate certain levels today, I find that to be very interesting. Hopefully there's no other questions on setting up, the two types of floor trader pivots that we have on the TradeStation desktop. But if you guys do, please join me in Ask the Experts on Tuesday at 11:30. But guys, that's my class for today. I hope that you guys got something from it. And I wish everyone a great weekend. So I hope to see you in any of my future classes next week. Okay. See you guys later. Great having you. Goodbye.